a breakout of new high today in the advanced decline in the S&P. We have this little zigzag pattern. I'll bring that to your focus in just a moment. We have sideways action here in the Qs, and remember, the NASDAQ was probably for the month of March one of the strongest sectors that we had seen. Another thing is we've got a little breakout happening here in the Dow Jones Industrial Average, and a sneaky uptick with volume happening right now in the Russell. So this would be an exciting opportunity, and one of the areas that I think we need to focus on, as I've been talking about in prior videos, is looking at the KRE or the bank sector to lift the Russell. Well, guess what? Today, one of our stock picks, which we came up with through the PMC indicator, the relative strength tool, you can find that here with my TradeStation lifetime package as well as on Thinkorswim. We'll bring that to you in just a second. But what I'm looking at is a potential breakout. You may want to look at short-term swing traders. If we get a close greater tomorrow, if we can close greater than the weekly or at least the last couple days highs, and on Friday, if the market shows follow-through volume with an uptick towards the end of the day, what I'm looking at is longs in TNA. You could look at some options here on the upside on the leveraged ETF on the small cap Russell. We should be able, if we get that confirmation by stronger upside, if we can get a close greater than this high, I want to have participation in the long side of TNA. And if we can get a big a close greater than that line in the sand, TNA, I'm looking for a minimum objective right around 73. We have an old high right up there, the old lows right down there, and you can see there's been a lot of persons pivot resistance, the pivot point, support. I mean, this is just a huge high energy level, and if we can see some momentum near term, I think that's where we're going to end up in about the next 2 weeks. So it does look a little promising. As far as the contrarian indicators point to, man, there's a lot of people thinking this market's coming right back down, and rightly so. There are some conflicting signs in the market right now. Let's take a look at what the scans show for us going into Friday at the end of the day. Now, I have a couple scans, one that are filtered, that look for buy signals with a few other items. They got to have, the weekly's got to be in a buy mode. Number one, it's got to be an uptick in volume, and we call that a trilogy because we need three things to happen in order to give a higher probability buy. Now, what we did is we ran a scan here in the S&P 500 and the NYSE. So, with that said, you'll notice we've got a few energy, console energy, CNX, and that's interesting because if you've been following our videos and you get the person's weekly thoughts and observations written report, you know that we have a long position in Hess already and NBL, Noble Energy. Interestingly enough, let me bring these into focus real quick, and then I'll get back to the scans. These relative strength tool, again, can be found both with my proprietary, it's a proprietary relative strength indicator tool. It helps us to determine whether or not the market is outperforming the benchmark. That's why in the whole energy complex, we had looked at Noble because it was starting to see an uptick in the relative strength. You'll also notice that it had this little PPS buy signal, and in addition, it had another thing going for it. It was above the pivot. Look at the blue line. Each corresponding blue line is making higher outlook. So that's a bullish minor upturn trend, and the relative strength increased. We wanted to be a part of this move. So Noble Energy, that's how we selected that. What about Wells Fargo? Now, you know that we have a position in Wells Fargo. We bought the pullback down here near the green line, which is called Person's Pivot Support. We started to see the relative strength improve, and with that said, in the financials, I liked Wells Fargo relative to any of the other big banks and Morgan Stanley. If you go through our Twitter account and you look through the tweet, you'll see, hey gang, WFC, Wells Fargo, something going on. It looks like it's one of the stronger stocks in that sector, and I liked it better than Bank America. Well, today, guess what? It's an announcement that the CEO has stepped down, and the stock in after hours is up to around 50.30. Now, I don't like to be in stocks and have them go up just because the CEO resigns. That's not a good sign. So basically, I like a company to go up on its own merits, that it's making money, that they have good, relative strong guidance. They're doing things right and good leadership. The stock goes up because the leadership quits. There's two things we're going to do. Probably take a quick profit on that trade tomorrow, Friday, or sell some calls. If I can get any premium, I'll probably sell some calls, and because we might not go very far to the upside in Wells Fargo, 52 to 54 possibly. So that's my outlook, but it was really the relative strength, the PMC indicator, that got us into the trade, and it did pretty well. Look at the BAC, Bank America. I know a lot of people, Bank America BAC person, let's get that fat finger problem out. Relative to Bank America, look, Wells Fargo's performed better. It didn't fall as much. And while Bank America is still a good company going forward, it just didn't have the immediacy of me getting into that trade. So that's why we chose that. This week earlier, we also looked at Kellogg's. Look at the relative strength, by the way, and that's what I sent a tweet out earlier, was to say, hey, it's because of the relative strength. Look, improvement. Look at the buy signal, and that's why we wanted to go with a silly company like Kellogg's. Not the sole reason. I'm also a big fan of the Rice Krispie treats. But anyway, Kellogg's in the consumer staple area is one that we wanted to take in a position. Now, we did not get filled because we were trying to buy a pullback. It didn't pull back enough. Other names this week that we were trying to get into, Ralph Lauren. And the list you can find, I'll quickly share that with you right now. All right, so here's the weekly newsletter. This comes out Saturdays. We send it out at least no later than Sunday with a video report. Everyone can review our thoughts and observations. And what I do is I look at things like the knob spread, notes over bonds. That's what that chart represents. We go through and share with you what the performance is for the top stock sectors, the weekly, monthly, quarterly support, which, by the way, this weekend, it's going to be a big weekend because we have a new quarter, a new month, and a new week. So we're going to have all new data to get ideas for the coming month and quarter ahead. So this was what we were looking at right here. Here's the sectors and stocks we're going to be focusing to enter on long positions. This is the report that we had coming into this week. Notice that we had, without any earnings risk, we don't want to be buying or selling a stock unless it's an option strategy ahead of earnings. But we were looking at Abercrombie & Fitch, Ralph Lauren, big movers today. We wanted to see rotation into some of the retail apparel stuff, stocks. Target, TJ Maxx, Constellation Brands, and again, Kellogg's, and that's the one we were trying to go with as on this week. Looking at Canopy Growth, some of the marijuana pot stocks on lower levels. Now we have one Zynerbad, I can't pronounce all of these names, but anyway, Afria, these are the ones that we're looking to buy on pullbacks, and they are pulling back right now, so we don't have the buy signals. Disney we wanted to get in. Wow, it took off. That was irritating. Illinois Toolworks is a great company to look at, not just as a purchase if we see an uptick in the industrials and the economy. It's a great harbinger to see if, in fact, we're entering a recession or if there's actual orders going through. So Illinois ITW, it's great in both those senses, and Dow DuPont. So going through the motions here, this is what we talk about coming into the week. We were talking about a daily close in the market would send this thing in a tailspin. We tested that level the other day twice, 3 times. It could not break it. Those are still very valid levels unless we get a sell signal from higher levels. Keep that in mind. Next, here's where we put out the weekly observations. These are the bullish signals. This is what I generally put out. The stock, the entry, the stop, the first target, and a holding date. What we expect to see that profit target minimum objective hit. No new shorts for this week. That was a good move. Last week we bought into Wells Fargo, Noble, and Hess, as I mentioned earlier. So here's the performance for the year on a cumulative basis. These are, we are supposedly averaging a trade a week in stocks, but as you can see, we're well above that. And option trades. This has nothing to do with the trades that we do in the live trading room. But what I do is I go through these scans, what I'm sharing with you right now, and we put out our recommendations on the stocks and the sectors, and then we combine that with the live trading room. So for tomorrow, coming in, what stocks generated an interesting setup? Well, first and foremost, we have some of the banks started in income funds, but we didn't get a true strong reading from participation in the small cap regional banks. That's what I want to see. I want to see regional banks pick up, and when I do, that's going to help us lift up the Russell, and I want exposure to TNA. All right. So as far as anything off the charts today, we didn't get a lot of new, fresh, dynamic buy signals because it's kind of been in a buy, right? The thing is, if we have a lot of stocks that are in buy signals, the last thing we want is we do not want new populated sell signals to come up. Quite frankly, we didn't get a lot. There's a couple here that you'll see in the biotech like Celgene, but I'm not really considering that a sell signal because it's in a sideways range. It didn't have a strong reactionary rally, so then therefore I got to keep my eye on that one. So looking at unfiltered buy and sell signals, I know I've done this before with you in prior videos. I just thought I'd share with you where did we get a concentration of buys. By the way, let's take a look at what symbol universe. I ran about 5,000 stocks from the S&P, the NYSE, and the NASDAQ to give you this data. This is what we ran to see what kind of buy signals materialized. We have a strong concentration in materials, so that's pretty good, number one. Then we have in capital goods, some industrials, American Woodmark. That would be ironic because they make the kitchen cabinets. They give distributorship to Lowe's under one name and Home Depot under another. With the housing and the economy falling apart, this is a company that generated a buy signal, and it looks kind of like we may come out of here. We're in a long-term monthly buy. It pulled back. So to be honest with you, this is a stock that has potential to move up. But here's one item that's missing in this formula. It doesn't have strong outperformance in the relative strength, and it doesn't have strong accumulation in volume. So unless we actually close greater than the pivot, then we get a breakout. That's when I say we can go with it. When your relative strength improves and volume improves, and that's how I use a little extra filtering techniques. But what I'm doing with you right now is going through to find out where's the heaviest concentration of buys. So we discovered it's materials, consumer cyclical, and again, this would be like more consumer discretionary. Look what you got here. Whirlpool, Movado, great earnings. They've been selling some watches and jewelry, so that means millennials are even getting behind things and buying stuff. Lululemon hit the ball out of the park today with earnings, and that is what also sent the names that we were looking at, Abercrombie & Fitch and Ralph Lauren, higher. So we have a lot. Look, Columbia Sportswear looks like we're about ready to break out. It has better looking construction from the relative strength improving and the volume. So that's a scary chart to want to jump on the Columbia Sportswear, but it's a good indication that money is flowing into that space. If you're into energy, we already have exposure. If you haven't gotten any exposure in it, Murphy Oil is improving with its relative strength, but I prefer Hess at this point and Occidental, a couple others. Let's take a look in the financials. If you notice here, there's wow, interesting. We did see First Republic Bank. We're starting to high close doji, PPS. Take a look. We're starting to see some First Commonwealth. You know, that's a small cap bank, right? First Hawaii, FHB, another one. You know, if you look at this with me real quick, friends, you will notice that they all have a very similar pattern. They've held, but they haven't broken out of their pivot. What was once support now turning into resistance. Here's another one here. Let's take a look at Glacier Bancorp. I don't know who this company is, but they have about 6 million average volume over time. And see what I'm sharing with you? It looks very similar to a lot of. So it tells me that the banks that got slammed are being traded by large institutions, as well as these stocks are in maybe sector ETF portfolios like the KRE. So take a look at the KRE. You know what? It looks like an exact mirror of the last company, whoever it was, Glacier Bancorp. The KRE looks just like that stock. So we do see if we get an uptick in the market. All right, so here we go again. Wow, big. Look at the amount of concentration of financials. That's a great thing. Here we got JP Morgan. We've got a lot. I just saw Charles Schwab in there. So we've got the broker dealers, we got investment funds. So today we generated buy signals. Maybe that's just a little short covering ahead of the end of quarter. But if we can materialize, again, the key is for me, I need most of these to get back above Friday. That's a week ago's Friday. You can see that's the high mark right there, and then it generates this pink line. That's what's called my last conditional change indicator. Something I wrote in that book 15 years ago. Wow. As you can see, material still works to this day. So I think if we get a stronger concentration in uptick, look at the amount of financials that this goes on and on and on. So look at the scan results from 480 all the way. So 480 minus 256. 224 stocks, all financials out of this scan. That's incredible. That's a great sign. We need financials, transportation. Remember, we needed industrials, transportation, and the financials to kickstart this. And energy wouldn't hurt, of course, as well as technology. But if we're going to see upside, we need, besides the FANG stocks, we need the rest of the so-called sectors that generate commerce in our economy to lift the overall benchmark indexes. And that's why the breadth, the advanced decline, rallied or moved higher. Advancers outpaced decliners because a lot of stocks in other sectors that people aren't focusing on are moving up. So we take a look in healthcare. We have, which is under duress with, again, everyone from both sides of the aisles screaming for cheaper drug stock prices. So anyway, we've got some interesting stocks here. Jazz Pharmaceutical, a lot of these are all biotech, 11 biotech. So we got to look and do a little bit of homework and say, okay, out of these biotechs, which ones have stronger or improved relative strength with uptick in volume? And here's one right here. This is a small, it's not huge, but it's $93. Inogen, you're probably familiar with that one, right? And then we will look at these names as we conclude the week and the month, because we now have a strong indication that we might see an uptick both weekly and monthly, and that would be powerful. And here's a good one right here, Progenics Pharmaceuticals. It's a $4.60 stock, and here's how I'd be looking at this guy, because I really do like that, the improvement in the relative strength, and the volumes, it's iffy, but it's improving. The weekly on-balance volume looking great. My volume indicator looks spectacular. And if we can get this market to close greater than, say, 460 on Friday, I would prefer above that swing high right there. You get a close greater than that, this thing's going to launch. And that would be a momentum play, probably, to give you at least a buck upside. 533, 460, so anywhere between there and up to $6 would be my profit target in the near term. So there's one that we came up with together here. And then finally, looking at what other sectors are moving, a lot of small retail, which is good, and we keep going down the list here. Let's take a look. Restaurants are in the play right now. A lot of small cap. You'd want to look at SONC, Sonic. You'd want to look at, not Sonic, excuse me. We'd want to look at maybe Yum Brands, YUM. SHAK, Shake Shack is another one. It's starting to break out. I'm not a big fan. You'll notice here we've got a couple, maybe I saw Las Vegas Sands, LVS in the casino operators. I'd give that one a little bit more time, but it's nice to see discretionary stocks get behind this move. And then finally, wow, we did get some participation in some technology names based on Thursday's minor movement. You just wouldn't have thought that we had this kind of accumulation of that many stocks in these sectors. So this is very positive into it. There's one that's widely held. Wow, look at this stock. It's at not just 52-week highs. I think this is an all-time high. And they still like buying it. So that one would be a pretty, I'm not a big fan of this. I'm just saying that it generated a buy signal. It's supportive, if anything, to the sector. But I'm not a big fan of stocks that rise when you have an increase with decline in relative strength, decline in volume. But it's good that it adds to the flavor of a bullish tone to the overall market. That's the point. So we want to look for, again, we had made money in Akamai Technology. There's a better, we had a little rising wedge. You know, we've already done the work. We made some money. We got in, we got out. And maybe it's time that if we if you imagine this, if we get back above this line in the sand, we have a potential, look at this. It almost looks like we could break out and form a little head and shoulders bottom pattern here. I want to see how that closes for the weekend. So that's Akamai. So there's a lot of great things. Now we get into last and final roundup here, the transportation. And this is what we need to get this market lifted to new highs on the year. And if the advanced decline shows that we've broken out, as I shared with you earlier, then what are the underperforming stocks that need to come to play? Transportation, energy, financials. Now let's take a look. On our screen, on our scans that I just shared with you, financials, so you could look at maybe leveraged ETFs, the FAS, if we start to break out, take a little position in that. Next, if we get the banks, let's get a little bit, instead of going with the KRE, I just shared with you how the banks are really weighted with the Russell. Let's take maybe a long position in TNA on that breakout. And then finally in transportation, this would just be good for overall S&Ps. So maybe you take a look at SPXL, the leveraged ETF to the upside, or some call options or bullish strategies. So this is good start. This is how we formulate a plan. We look for things to trade. And now we're just waiting for the trigger. When we get the trigger, we go with it. That's where we go from that top-bottom approach. Look at these names. Delta, the airlines. It's just not one. We've got rails in here. Kansas City, Knight Transportation, a trucker. You've got Southwest Airlines, Love. Hasn't had a lot of love for investors in quite some time. We also... Scorpio tankers. Now you're getting, you've got the tankers, you got water, air, freight. It's all over, mixed. This is positive, friends. All right, to wrap up, I wanted to do a top-down. This might be too much video for most, and I do apologize for that, but I'm pretty thorough, and I think before I invest my money in the market, I want to make sure that I've done my homework, and this is how I do it, top-down. As far as our algo strategies, this is the live trading room. You can clearly see we're in a little drawdown. Not bad. I mean, we've made, this thing is just sick as far as its profitability, but we've been in a very tight range in the market. So what is, after periods of profitability, you go through maybe a little choppy phase, consolidation. Guess what? We're getting ready to break out. If the spiders break out to the upside, the odds are starting to suggest that maybe we will, because the 60-minute is suggesting strong volume accumulation. The volume here, we went from weakening to, it looked like this thing was going to just absolutely fall apart. It hasn't, but right now the volume is still red on the BXX, and I don't think these guys really know which way to take this thing right now. As far as the S&Ps, here's our day trade today, and yesterday did a great job. While I was at TradeStation, by the way, giving the keynote speech down there at their masterclass, I logged into the live trading room and let people see what we have going on in our own live trading room. And as you can see, listen, here's the profit target, and there's where it's scaled out. Yesterday, we actually nailed some really good trades on the ES using the algo. And again, today, another good day. So what did it do? First thing this morning, as we got in, I announced to everybody in the trade room, I said, hey guys, this thing's long. You got a very small risk. There's the stop, the red line. It got out of the first profit target. Unfortunately, look what happened. It comes back down, and there's a scale out. So it stopped out. Cool. Again, it went short, and there was an uptick. It had the scale out. So, all right, it left a little money on the table. But here, another nice trade to the upside. And what did it do? It got out on what? Just sideways action, and it scaled out. And so it made some nice trades. Got short, said, time to get out, and then exited the trade. So we had some really nice trades. Here's the performance. Now, again, this is 2 lots. This isn't trading 10 lots. But today alone, and if you can filter out, you don't have to take every single trade, but when you see an algo system taking a trade and you know where your entry, your risk, and you can see what the trailing stop function is, you can piggyback that. That's what's projected in our live trading room each and every day. So this is, not a bad consistency of our live trading room based on a 5-minute model. So that's what we've got going on. And I thank you for watching. And please remember, if you like these videos, give me a thumbs up. We're trying to help investors, including yourself, most importantly. Thank you for watching these. I want people to learn how to trade with the logic and the right approach and remove emotions from your trading. And yes, there's a lot of information on the internet, but I'm here to tell you, we like to put out what's transparent. I like to put out the numbers as you are seeing them, not after the fact, but during the fact. In fact, we even talk about it before they even happen. If you'll notice here, this is where even if the charts are out of focus, you can still read the strategy price, the strategy P&L, when it was filled. Everything's right there. This is the live algo room that you see. And then again, we have the stock room. Thank you very much for watching, and I'll see you next time. This should be a very exciting quarter because we are not seeing volatility die. We have some really great trades setting up. I look forward to seeing you. Give our room a try. I thank you for watching again.